and welcome to Moneycontrol. You have tuned into IPO Watch and I'm your host Nickey Mirchandani. Well, today we are here to talk about Flair Writing Industries. It's a Mumbai-based stationery maker which is coming up with an initial public offering on November 22nd, closes on November 24th. It has fixed a price band in the range of 288 to 304 per share and intends to raise as much as 593 crore via the issue. Of course, the investor can bid in a minimum quantity of 49 equity shares and in multiple thereof. But to know more about the company's financials, strategy, the USP, growth profile, we've been joined by the Managing Director and the whole-time Director, Vimalchand Rathod and Mohit Rathod. Well, afternoon there, gentlemen. Thank you so much for taking out the time and joining us. Straight up, let's talk about...
Yeah.
Please go ahead.
Okay. So, Flair Writing Instruments is the largest manufacturer of writing instruments from India. We offer 700 products in fountain pen, ballpoint pen, gel pen, metal pens, and that's it. We are the largest exporter of writing instruments from India. We are exporting to 95 countries. We have got 11 manufacturing plants and with the capacity of 200 crores pens per day. Presently, we are manufacturing 125 crore pens per day. We have got 11 manufacturing plants in India, in Valsad, in Dehradun, in Daman, and in Mumbai. Now we are entering into another product range, that is the stationery products, which we have started 2 years back. And in future, we are planning to start the metal bottles manufacturing. Now I request Mohit to take over.
So in addition to what he said, I would just like to add one thing that, all our brands, be it Flair, be it Hauser and Pierre Cardin, have been growing consistently for over the years. And we have one of the strongest and the largest distribution network in India, which we are catering to more than 2,400 cities, towns, villages and taluka places. So presently we are present across all nook and corner of India, and with a strong presence in 3,15,000 retailers and wholesalers pan India. Yep.
All right, either one of you could answer this one. I essentially wanted to check on the company's revenue CAGR, which has grown as much as 77% from FY21 to 23. That's the last 2-3 years that we're looking at this kind of a growth. Can the momentum be sustained or perhaps even outperformed?
See, if you look at our historic track record, we have been growing consistently at a 14% CAGR from 17 to 23. And going forward also, with all the three verticals in place, be it writing instruments, be it creative and stationery range of products, and the steel bottles which we are venturing into, putting all that into consideration, we would like to maintain the same momentum going ahead, and with a healthy top line and a healthy bottom line as well.
All right, so 14% is the CAGR that one can look at for the next 5-8 years. Have I got that right? 17 to 23 is what you've captured thus far. You think that you'd be able to maintain the same amount of momentum?
Yeah, so would be growing consistently within that range, going forward as well.
Okay, the company right now runs as much as 11 manufacturing facilities. On an aggregate level, what's the capacity utilization? How much does the company intend to scale that up by and by when?
Yeah, so if you look at our current capacity, we are manufacturing more than 200 crore pens annually. If you look at break it day wise, we are manufacturing more than 60 lakh pieces on daily basis. Going forward, we are going to raise the main objective of the issue is the primary 365 crores what we are raising. I would just like to give you a breakup on that. So currently, the 666 crores, out of which we have already allotted we've done a pre-IPO allotment of 73 crores to Valrado Ventures, which is a part of Inam Group. And balance 292 crores, we would be investing 143 crores in greenfield and brownfield expansion, which is going to happen in Daman, in Valsad and other units all over. And 43 crores is going to go in green repayment of debt. 77 would be used as a additional working capital. and balance would be used in the general corporate purpose. So once we are ready with all the units and the expansion plans, the production capacity would go from 200 crore pens annually to 235 crore pens annually. Other than that, we would be also upgrading our existing facility, where currently we are manufacturing 70% of our own tips. So we are planning to increase that from 70 to 85%. And at the same time, putting more lines for the steel and the vacuum bottles.
All right, but right now, what's the utilization rate?
So current utilization is at 74%. I would just like to give you a perspective on that.
And how much do you intend to scale that up?
Yeah, so I'll just give you a perspective on that. So the optimum utilization of our current capacity is at 75%. So because we are offering, as Uncle mentioned, that we offer 700 products in various 2,300 SKUs under various color combination and number of products what we have. So the maximum or the optimum utilization is 75%, because we have to do a lot of mold changes, downtime changes, and product change. So after the additional capacity, we would be going from 200 crores to 235 crores.
Okay. How about the utilization scalability? That's clearly the number that you've given in terms of the top line performance.
Yeah.
How much
so
is scalable? 75% goes up to?
75% is the optimum utilization currently. And currently we are at 73%.
Okay.
So,
all right.
so
okay. So that's the limited scope that we have in that case, given that it's the optimum utilization that we're working with. Thank you for that clarification. But let's talk about exports, right? The company's share of exports has come down from 36% in 2021 to 19.5% in 2023. What explains that, and what can be expected going forward?
So if you look at the share numbers, export has grown from 130 crores to 183 crores in last 2 years. So in terms of growth, we have clearly grown in exports. But at the same time, we would like to inform you that the domestic market is also growing at much faster pace. And, so that's the reason why the growth in export, or the ratio of the export looks a little smaller compared to. But if you look at the share numbers, we were 130 crores 2 years ago, and currently we are at 183 crores.
Sure. Also, let's talk about your margins, right? Beg your pardon. Actually, I'm going to hold on to that thought for a bit. You said your exports can now be scalable to what level, please?
So going forward, we are.
Go ahead, sir.
So currently last year we did 183 crores. Going forward also, we are projected in the similar range of growth at 15 to 16%.
Oh, so it will come down further from 19.6% to 16%. Have I got that right?
I'm talking about the growth. It would be in the same ratio. It would be in the same 20% ratio of the total turnover.
Okay. All right. So now the emphasis would be more on the domestic market or export?
So domestic market was always our emphasis. We always wanted to grow stronger in domestic market. So whenever there was, the production crunch, we would suffice the demand in domestic rather than exports. But going forward, we have enough capacity to cater both the market, domestic and international.
How about your margins? They have expanded from 8% in 2021 to 10.5%. Can this be a steady state that we're looking at? How sustainable are these margins, or you think you can add on to these ones?
So if you look at our last year number, in the revenue of 950 crores, what we did, our EBITDA level margin was 19.5% at 188 crores. And our PAT was 118 crores, which was at 12.5%. So going forward, also we would like to maintain the similar pattern of healthy bottom line, which is EBITDA at 19.5 to 20% and PAT at 12.5 to 13%.
Okay. All right. Also, let's talk about the levers that you think would be leading to this growth coming in for the margin profile of the company, essentially, the tailwinds.
Yeah. So if you look at the growth strategy, clearly, as we have already mentioned that historically we have been growing consistently, and going forward also we would be doing the same thing. And all the three verticals which we are focusing in, which is currently the writing instrument category, the creative and stationery category, and the vacuum bottles category, all these are going to drive the numbers. Of course, the steel and the stationery category, the creative category, the growth is going to be much larger because the base is very, very small.
All right. How different is your company versus, say, a Camlin Link? These companies, what's the unique selling point of this company vis-a-vis the peers?
So if you look at the overall strategy, there are a lot of factors to it which makes us different, and which makes us in a leadership position in the current stationery market. Be it right from the brand legacy, what we have, to the distribution network, what we have created in the last 50 years, right from the product offer, what we have, and the brand, what we have created, be it Flair, Hauser, Pierre Cardin. And as we already mentioned that we offer 700 different products, as we all know that India is a very diverse country, and each state has its own needs and preferences. So with the experience of 50 years, we understand these factors. So we offer a very, very good combination of products, right from 5 rupee MRP to 3000 rupee MRP across various brands. So this combination, along with the brand and the distribution network and a very, very lean manufacturing setup, where we control each and every processes, right from quality to cost control. So it makes us a perfect, ingredient. It's a perfect ingredient for being the leader in the industry.
All right. So brand, strategy, and of course manufacturing facilities are the three key USPs that you have at the moment. Let's emphasize more on the strategy. You're emphasizing more apparently on the mid-premium segment and the premium segment as per the RHP. That's the strategy of the company going ahead, which is also expected to increase the margins. Correct me here if I'm wrong. What's the growth currently from this segment? Because you said it's right now you start from 5 and rupees 5 to to the upper band of it. What kind of segment is this? What is the growth coming in from that segment presently? How much do you intend to scale it up by in the future?
Yeah. So if you look at our current portfolio of products, we have a very, very healthy balance of mass versus premium and mid-premium. I would say we would be, as I'm re-rating myself, we would be the only company who has the healthy balance between the mass and mid-premium. Of course, the mass is going to grow at its own pace, but at the same time, mid-premium is a category which is growing at much faster, pace. And recently also we have launched one more brand in the name of Zooks, mainly in a premium plastic products. This is a pen, where we have launched premium plastic products in the category of mid-premium, right from 40 rupees to 80 rupees, competing against the international brands in India.
How comfortable is that pen, just out of curiosity? Because when you raised it, it seemed like a very thick pen to hold, in the first place.
No, basically, I was holding it in the packaging, so it's this one.
All right. Yeah. Okay. I would also want to chat about the strategy. Essentially, let's highlight more of what kind of growth is coming in from this mid-premium segment going forward. Could you put a number to it as compared to your percent of sales? How much is mid-premium and the premium segment contribution overall to your top line, or would be in the year FY24 and 25?
So.
Okay, looks like we've got you on a scratchy line.
So,
Mr. Vimal, would you want to pick that up? Okay, we're trying to get back. It seems like a very patchy line at this point. But fair point. I mean, the company has spoken enough and more in terms of the capacity utilization being at 75% as compared to 73%. That's the optimum level that they're working with. And also they've spoken about their manufacturing facilities and the brand and of course the segments that they've been targeting thus far. It looks like three-pronged strategy which seems to be working in the favor of the company, but it remains to be seen how much growth can be scalable, right, in terms of the revenue CAGR 14% was what we were looking at from FY17 to 23. That's the number that was captured by the company rather in these years, and the company expects to replicate that growth. And of course, do bear in mind the fact also the export market share, which has dropped in from 36% to 19.5%, or roughly just say 20%, is expected to continue thereon. But Vimalchand and Mohit are back with us, and of course, Mohit, we were continuing with a conversation where we were putting a number to the contribution coming in from the mid-premium segment and premium segment as a percent to the revenue.
Yeah. Premium segment is going to be around 48 to 50% of our total sales.
All right. And right now, what is the split?
It's around a couple of percentage down.
When you say couple of percentages down, could you put a number to it?
It's about 46, 47%.
So 46 to 47 goes up to 48 to 50. Have I got that correct?
Yeah.
Okay, where will the incremental growth come in from? Is the company also going to be looking at inorganic means to expand? What are going to be the growth levers per se for the company going forward?
So going forward, the growth levers are going to be, of course, our writing instrument, which is our core category. We're going to grow substantially in the creative and the art division, which we have just ventured into 2 years ago, and we have done decently well in this industry, where last year we did about 115 crores of revenue in this. Of course, and the third vertical is, of course, the steel and the vacuum bottles. So going forward, these two categories, where the base is very, very small, is going to grow a tremendous growth. At the same time, maintaining our leadership position in the writing instrument, we would be continuing with the 14% CAGR going forward. And of course, the steel bottles is altogether a different category, which is going to be additional revenue.
All right, Mr. Vimalchand, I'm going to come back to you and check with you in terms of your diversification plan, sir. How do you intend to diversify in terms of products, in terms of geography? What's the plan for the company?
Yeah, geographically, we are expanded in all the 4 regions of the India. And in the export market, we are the largest exporter, and we are exporting to 95 countries. We plan to export to much more countries to expand in the market.
So 95 countries is right now what you're exporting. How much more countries do you intend to add to the bucket list? And of course, in how many years, and how much will your revenue contribution go up from those countries?
The revenue contribution will go from presently 185 to 220. That is the target we have set for the next year.
All right. And in terms of percentage mix, what's the number that we'll be looking at?
Right.
So you were talking about the number of countries, right?
Yes.
Which we are adding. So currently we would be adding every year on year, we would be adding 3 to 4 countries in our list. And at the same time also, consolidating our presence in those 97 countries.
Okay. And the number remains at what, 20% level thereabout even after addition?
Yeah, because our domestic market is growing at much faster than the exports.
What is the margin difference in exports versus domestic currently?
There is hardly any difference market, because the percentage wise we operate at the same level.
Okay. Mohit, would you want to add on to it?
Yeah, as he rightly said, the margins are more or less similar in exports and domestic. Because in exports we do also, out of the revenue we do 50% of the revenue comes from OEM, where there is no distribution cost and there's no sales cost. But of course, more or less, and on EBITDA level, it's at 19.5 to 20%.
All right, gentlemen, we're just going to leave it at that. And thank you so much for taking out the time and having a conversation with us.
Thank you so much for having us.
All right, all the best for your issue. Well, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, but stay tuned in for more.